Hello, how to pick a stock for swing trading watch list. Well, let's take a look at our master list here, and we are going to analyze those. The first one is TFX. We are going to use maximum monthly chart, TFX. So TFX, let's trace some valley lines here. You want to trace the valley line passing by the obvious lows of the mountain, the valley line. You see that big mountain? You want the valley line. And you want that valley line to be uptrending. And right now, no, simple is going to be this line here for this particular one. So TFS has quite a bit of growth, and when it touched base with this support line back in 2000, maybe 2012 or so, no, way more than that, 2012, the year is on the x-axis from the past to the present, and you have the price from 0 up. It went up for all those time, all the way past 2020 before it start going down, and it's following this valley line. And those technically are something that I do not add to my watch list. But going into FY26, I'm trying to take a laid-back approach to swing trading by molding it to be a type of short-term investment / swing trading, picking stocks for short-term investment using swing trading strategy. And this, instead of saying flat no, like I said, the past 2 years, it was not on my watch list, we are going to view it through another lens. So we are going to see how many years of growth we have here. So from here, when it touched base, in fact, this was the highest peak, and then it took 3 years or so. In fact, yeah, it took 3 years. It took a year and a half to come back down to the valley line. But then you can see that it reached at $36. When I put my mouse here, we have the price corresponding to it. But then it remained there. It went up, pulled back, went up, pulled back. It remained there for 2 years. And at that point, it was like $48. So you can see from 36 something to 48 there is some, price or $10 or so difference there within 2 years. So quite slowly. And from there it start growing. So 1, 2, 3, 4, 5, 6, 7, 8, 9, pretty much about 10 years, 9 to 10 years of growth. And from 48 to 449. 449 divided by 48, 9 times your capital. And then it took 1, 2, 3, pretty much 4 years coming down. So 4 years to come down. And from here we can see that it took about a year and a half or so, but then lingered there to make it 1, 2, 3, 4 years around there before it started taking off. So about 10 years of growth, 4 years of pullback. So we are going to, and we have this valley line is not quite tilted, it's kind of horizontal. And it just seems to me that this stock tend to be kind of stable, but has some growth to it. It just didn't show that much growth in the past though. 29 to 78, and from here from 48 to 400. Interesting. So that just, but again, if that's something you purchase to invest in, your money will be growing along this valley line. Swing trading allows you to sell it and lock in the profit, the growth away from the valley line, lock it in and buy it again. And yes, you are going to buy at a higher price than originally, but that is fun. But locking those growth instead of letting them evaporate. So yes, we are going to add it to our watch list of short-term investment to buy at the valley line. When it reach that valley line and start going up from there, it could linger there for a while before it will take off, but it's like 10 years type of weight on that one. So we are going to say, you can see I put no on it prior because it's not something I put on my swing trading watch list. I want things that is getting to the peak and coming back to the valley within a year and two to be in my watch list where I can have quick cash flow there. But we have this one that can take time to grow, take time to come back down. So we want to get it when it reach the valley line and start going up and stay in it for years and then sell it and then come back to it. So we are going to put here short-term investment, and here we can put 10 years growth, 4 years pullback, and this is going to be that. And right now is going to the valley, so we can, and that's something we'll keep an eye on it to see if there is a chance we can buy it before 2026 starts. So the next one is COO. So COO, let's trace some lines here, and I'm not sure if I trace a valley line there for the other one. TFX. Let's turn this into a teal color. COO. So we have that line. We have this we have this one. Perfect. Again, passing by the V, the bottom of the V, a touch base with it and start going up from there. So time to buy now. So now, again, we are using maximum monthly chart here to see the overall of the what is going on. So from here, we can see we have a valley going up. This is just too low for that to come back to it. But now we can look at the peak to see if we have higher peak. So we have, yes, the peak is getting higher and higher, but it took 1, 2, 3 years of growth, and then it pulled back. When it pulled back to it, it has now really come back down to it. This one came lower but didn't really touch base with it. So we can just say that the second growth here, the growth from this valley line, took this long, 1, 2, 3, 4, 5, 6 years, and then it's done. So pretty much it's taking its time. So it came back close but not quite close, and that is 1, 2, 3, about 4 years. So 4 years to come down. And how many this years is, I'm not entirely sure anymore. I counted to grow. So that means when you buy at the valley line, you just don't want to sell it when it exceeded this peak, because it could well spend years making higher peak. It might take some years before you find it again around this valley line. So this support line is long, multiple years that it crossed. Therefore, it's a good one. And yes, it has higher peak and it has a higher lows at the valley as well. It's going to be one we are going to add to our watch list, and right now is around that valley line. So we are going to go to maximum daily chart, which we use to do analysis, to buy, to see if we can make some purchases here. So it touched base with that line, went a little bit below it, went up, went back. So from here we are going to try to create, let me do it this way, a trend line there to see it. So it pulled back, it's following that, it's uptrending there, but it went a little bit below it and then start going up. So we are going to wait to see it is going to have a pullback, and then when we see a green bar we can buy. Keep in mind, because it's going to take so many years to grow, it might linger around this area quite a bit, and we are not trying to time it right to find the right time to buy. We want to buy around this valley line. It's already there and it's already climbing up there, and we are having higher highs there, but it could turn around and pull back to it again. So we are just going to keep observing it to find an entry point there to buy, and we can decide to buy at this support line when it breach it and rest on it, start going up from there, or now when we see a pullback and we see a green bar, we can buy as well. But yeah, we are just going to keep observing it because we are in it for the long run. We are not going to try to be picky here when it comes to where we are going to enter. We are okay leaving some money on the table, but we just want to, buy there because again it came to that valley line, and so we are going to buy it. Even though we are creating a watch list for next year, it's there already. So we are going to go back to maximum monthly chart, and this one is a yes as well. And I'm going to, let's see if it's going to be a long-term investment. Not really, probably, but at this point I'm trying to see what category watch list I will put it in. I'll put gold chart there to put it in the swing trading category. So the next one is MCK. Okay, that one is shooting to the sky. So MCK, we have those lines that we trace. We are going to see which one we would like to buy at next year. This is going across this that I'm not entirely sure if I wanted to consider this line, but I'm feeling like this could be our entry point. It has not come back to it yet though. It rested on this one, but it has not come back to this line yet. So we are going to keep those two, but I think this is going to be our buying, our entry point. I'm going to change that one to teal color so that I know that that is where I prefer to buy at, because it's going so high here that I have a feeling like is at some point it will decide to come back down here. It has not done that for the past 1, 2, 3, 4 years, and I just don't think 4 years is enough for us to continue claiming this. It's just too steep to be a valley line. It could well be supporting the upside wall of the mountain. It might just be having, with the other stocks that we saw, it might just be growth. It just have like 1, 2, 3, 4, 5, 6 years of growth. Does that make sense? Type of things that it might pull back to this. So keep buying it at this one. When it's done, we might get stuck in it for a while. Therefore, I just prefer to wait, because 4 years is not long enough of a trend line for me to continue buying it at. So therefore, I'm going to wait. When we saw the growth here around this valley line, after this peak was 1, 2, 3, 4, 5, 6 years as well. And then it took 1, 2, 3, 4, 5 years to come down. So it could well take that long to come down when it's done. But it took 6 years to go up. It's taking 6 years of growth here as well. So let's keep that in mind and just wait to buy at this line. But right now, it's nowhere near it. So yes, it's going to be in our things, and we can put a note here that 6 years of growth, 4 years of pullback. But does not mean it's going to take that same number of years necessarily, but we will keep it. And we can see that, we have both higher lows and higher highs. So one more we are going to analyze is COR. So COR is going up for the time being. But let's see if we can trace some lines here. We have an uptrending valley line, and we have an uptrending mountain peak as well. And when we are looking at it, this is a possible purchase point. We can activate this line to see if we can extend a little bit. And yes, we can extend a little bit. I'm going to take this line out of there completely and redraw it. Let's see, it's going somewhere here. Okay. So when we are looking at this, leaving here, we have quite a bit of growth. 1, 2, 3, 4, 5 years of growth, and then it pull back. 1, 2, 3, 4, 5 years to pull back. 1, 2, 3, 4, 5, 6 years of growth. So 6 years of growth, about 5 years, 4 years of pullback. So therefore, we are just going to wait, and we can make this one or this one could be our buying point. I don't know if it's going to come back down this low, or if it's going to use this one instead, because it touch point. When it touch point with this valley line and start going up, it claimed this one a little bit. So I don't know if it's going to use that as the valley line, or if it's going to come back down below. We are going to select both to be our entry point, but right now it's going up. So we can take a note of it. It's pretty much following this. Are they in the same industry? They are in the healthcare industry or sector. Okay. And they pretty much have the same pattern. So CAH. Okay. It's shooting to the sky too. Well, let's see if the valley is following it as well. So quite a bit of growth here, and then it pull back and zero it again and pull back. And so this pretty much, I'm not seeing any other valley line here. This is going to be the valley line, because when it shoot away from it, it comes back to it. This is quite high here though, but I'm not entirely sure what it tried to do here. This could easily have its own trend line here, but then it pull back, and this is a lot cleaner here, and then it pull back, and then it start doing it. So we are going to keep it, and we are just going to wait to buy at this valley line if it's going to come back to that valley line, and we don't know when it's going to come back to this valley line. But it does make a higher mountain. It just takes time. You can see that is why it was not on my watch list for swing trading, because when it reached this peak here, it took all those candlesticks below this cross that my mouse is making. It was negative, and it was below that peak. It took that many years before it exceeded, and that would be somewhere here. So we can count it 1, 2, 3, 4, 5, 6, 7, 8 years or so before it breached. So when it took 4 years to come down, if that's even true. 1, 2, 3, 4, 5 years to come down. 1, 2, 3, about 4 years. 4 years to come down, 4 years to exceed this peak, and then it continued going up from there. So 4 years to come down, 4 years to exceed the previous peak, and then continue growing past it. Pretty much 2 years and a half or so past that level. And if we are going to buy it, we will be buying it at this valley line. And again, if you are buying and just forgetting your portfolio, your money will be growing steadily around this valley line. You will be pretty much not locking in those growth away from the valley line. Swing trading will allow you to sell it, to lock in those growth away from the valley line and buy it again. Because the valley line is upward trending but not quite too steep, you'll be buying it at a higher price than originally, but still you'll be locking in quite a bit of growth. So last time it left that valley line was at $42. Now it's $208. So we can see the difference between those two. 208 divided by 42 is 4 times your money. So therefore we are going to keep it, but just know that to 4x your capital, you'll have to wait 7 years or so in that trade, if not more or less. So this is a short-term investment, and we can say 4 years to pull back, 4 years to exceed previous peak, 3 years to continue climbing up, climbing higher. So, and this pretty much conclude how you can pick stocks for your watch list going into 2026. There are stocks you can buy and just leave in your portfolio to let it grow slowly, being your bread and butter. And then you can have some that can give you in some way some quick cash flow if they can allow you to lock them in few years after you purchase it. You will say that in few years is long enough, and you'll be right. But we are just trying to, instead of getting in and getting out, to buy it again at that valley line we want to buy it. If it's going to continue going up, why getting out? Does that make sense? If you are going to wait to buy it at the valley line, why getting out as soon as it exceeded the previous peak, when it's going to take so many years before you find it again at that valley line? So there is more we can lock in. So if we can stay in the trade half that time frame to lock in some more, we are going to keep working on that to see how long can we stay in the trade to keep accumulating profit. Not all the profit, but a good amount, to lock in a good amount of this growth before we buy it again at the valley line. So pretty much pick stocks you want to invest in and swing trade them to lock in those growth. And those stocks we are picking, we want to see growth in them. And this won't be a stock I will personally want to invest in the sense that it's kind of horizontal, but there is growth to it. It's showing us some growth here. So we are going to, and it's a little bit, It's kind of stable. Does that make sense? Those large cap stable companies tend to grow slowly but surely. So we can use them as a bread and butter, have them, but we want to just know where we are buying it, and we are not using anything else other than our chart and our valley line to select them, ensuring that they're having higher peak. Select them to put in our watch list and grow from there. So this is going to be so those short-term investments are going to be our bread and butter, to be like the floor of the portfolio, because we know that it might take a half a decade for them to grow there before we sell it. And then we can have some that within a year. For swing trading, I want some that from the valley to the peak, they do that within a year. But you can see those, you can catch those as well when it starts leaving the valley line. The line that is supporting the upside wall of the mountain could be a line you can see those quick growth, those cash flow as well. When you buy at the valley line and sell it at the peak, buy at the valley line, sell it at the peak as well, and so forth. But that is, I think in some way as a swing trader, okay, I think that is the line that I just traced, that green one. Yeah, buying it at the valley, selling it when it reaches a new high, which will be March to May, 2 months. But then it's going to do all of that and come back to it again. And then it took a little bit for that to exceed it again. So you just have to see. But this one, along this particular one, along this upside wall of the mountain, the support line supporting the upside wall of the mountain, is not going too far away from it. Does that make sense? It's not going too far away from it. It did it here, but here it didn't. That's why when you buy, just keep it, make a lot more sense. But some of them can be quite a bit away from that wall of the mountain, allowing you to sell it MCK. That is how we trade a MCK. We trade it around this upside wall of the mountain, buying it and selling it there. And even in 2025, we bought it around this support line and sold it there. But we just don't know. And it came back to it. We didn't buy it, but it came back to it and reached a new high again. But buying it and selling it along the upside wall of the mountain when it's going up, I like to consider that short uptrend swing trading strategy. When you buy along the supporting line, supporting the upside wall of the mountain, so that because it already is climbing the mountain going up, and you'll be buying it at the valley line, at the supporting wall of the upside wall of the mountain, and selling it when a new high is reached, and then buy it again and sell it again. So that would be like a short-term type of trade. But using long uptrend swing trading strategy, I like to be buying it at the valley and keep it all the way to the peak, halfway through it, to sell it and get out and wait. That is the strategy I like to practice going into 2026. Thank you so much for your time. Thank you for watching our videos, and thank you for all your comments. We thank you very much for subscribing to our channel. And this is the filters we use to put those large cap stocks through to have a large list left that are growth large cap stocks that we are analyzing now to pull from for our 2026 watch list. And we might create 2 lists: short-term investment watch list and swing trading watch list, and trade both side by side. Thank you so much for your time, and thank you very much for subscribing to our channel. I'm Afiavi Liberman Girls of Liberman Consulting LLC YouTube channel, and ninasub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. For more tips on how you can create your own watch list, will you please check the playlist in the description of this video. And this video is brought to you by Liberman.com, our online store. And we have a tote bag listed right now. Will you please check it out? We sold to sell, and if you are interested in a bag, a tote bag for yourself or a friend or a family member as a gift, will you please check it out, please? Thank you for your time.